Got it. Voy a empezar de nuevo. Hola, bienvenidos a todos. Mi nombre es Maureen y este webinario estará presentado mayormente en inglés, pero va a contar con interpretación en inglés y en español. Y pronto voy a pasar el micrófono al intérprete para que le explique un poco cómo acceder a la interpretación y de dónde viene su cooperativa. Welcome everyone. My name is Maureen. I'm grateful that you all joined. This webinar will be presented mostly in English, but we can count on interpretation in English and Spanish. And I'm going to pass the microphone to the interpreter so that they may explain how to access the interpretation and more about their co-op.
Buenos días, thank you. Mi nombre es Alonso, estoy aquí con la Cooperativa Comunitaria de Lenguaje para ofrecer interpretación simultánea y confidencial para la junta de hoy. En un momento, si prefieren escuchar la presentación en español, pueden hacer clic en el globito que aparece en la parte de abajo de su pantalla de su computadora o puede seleccionar español bajo la interpretación. Si están escuchando en un teléfono, en un celular o en una tableta, pueden hacer clic en los 3 puntos que se encuentran a la derecha que dicen More o más y elijan el español como su idioma de preferencia. Como la cooperativa de lenguaje, estamos aquí para ofrecer un espacio de justicia del lenguaje para que todas las personas puedan participar en esta reunión en el idioma de su preferencia o en el idioma de su corazón. Esta es una responsabilidad compartida. Todos los que estamos participando compartimos la responsabilidad de hablar lenta y claramente para que la reunión sea accesible para todas y todes. El español es un 20 a 25% más largo que el inglés, así que tomen eso en mente cuando estén hablando. Si la velocidad es muy rápida, pueda que les haga una nota a detenerse un poco para que el intérprete pueda traducir todo de la mejor manera. Cualquier pregunta, vamos a estar activos en el chat para aclarar alguna duda de interpretación o de lenguaje. Good morning. My name is Alonso. I'm here with the Community Language Cooperative to offer simultaneous confidential interpretation for today's meeting. In a minute, interpretation will be activated and you will be able to select the appropriate channel. If you prefer to listen in Spanish, click on the small globe at the bottom of your screen and select Spanish. If you're on a tablet or a phone, click on the 3 dots to the right of your screen that say more and select Spanish there. The CLC is here to offer a space for language justice. What this means is that everyone can participate in the language of their comfort or the language of their heart. This is a shared responsibility, so please remember to make the meeting more accessible, to speak slowly, clearly, and make pauses here and there. Spanish, like other languages, expands by 20% beyond English. And so please keep this in mind as you speak. And if you plan to read a statement, additionally, you can always send those ahead of time through the chat. Any questions or doubts about interpretation, feel free to make them on the chat as we will be active there as well. Gracias.
Thank you, Alonso. Thank you, everyone, for joining us. My name is Maureen. I'm here with the U.S. Federation of Worker Cooperatives, and we're co-presenting this webinar with the Center for Community Wealth Building. We're joined today by Paul from the Center for Community Wealth Building and a few of my coworkers from the Federation of Worker Cooperatives to advance worker cooperatives' ability to file their taxes. And with that, I'm thrilled to present both Bruce Mayer and Andrea Roldan. Bruce has been a longtime cooperative accountant who has offered this educational webinar for many years. I want to thank you for serving the cooperative movement for so long and for consistently bringing us the hot news in the tax law landscape. And Andrea is a CPA as well who manages the ARCPA group, an accounting and professional services firm in the St. Louis area. And as a passionate educator, Andrea has graciously agreed to host this webinar, so they will be co-presenting today. Thank you for bringing all your experience to this webinar, Andrea. And I want to let the audience know that the preference is that you stay on mute, but feel free to put questions in the chat, and we'll be opening the space to questions throughout. And at the end, we'll have around 20 minutes exclusively for questions and a special breakout room for cooperative developers. So with that, I'll welcome Bruce and Andrea and pass the mic.
Okay, hello everybody. As mentioned, my name is Bruce Mayer. I'm a CPA in Madison, Wisconsin, and have been working with cooperatives and worker cooperatives for many years. Our biggest specialty is food co-ops, but we also do purchasing co-ops, worker co-ops. And I'll let Andrea, if you're on, introduce yourself, and then I'll get going on the contents and so forth.
For sure. Thanks, Bruce. My name is Andrea, and we are based in St. Louis, the ARCPA group. We are relatively new to the co-op space, but we have kind of helped develop co-ops, bookkeeping co-ops specifically. We work with clients, and we've been serving cooperative clients for almost 2 years now with, of course, with Bruce's help. I still send him emails when I have questions about things to make sure that we are providing you all in this space the best service and highest quality. So yeah, I'm excited about today.
Okay, next slide, please. So this is generally what we'll be covering, and you'll see that the slides are both in English and Spanish, so hopefully that's helpful. So I'll talk first about what income taxes mean for a worker co-op, and that's the primary thing we're talking about today. And then I'll just mention briefly a few of the COVID programs, the PPP and ERC, just to make sure that if there's any issues or questions or whatever that you at least been exposed to that and maybe can ask a question or two if you have them. And then we will talk a little bit about income taxes for you as an owner of a worker co-op. So go through the worker co-op itself, the COVID programs, and then a little bit about income taxes for individuals. And as mentioned, if you have a question, put it into the chat and we'll try and get to that as we go. And you can certainly save those questions for the end as well. Next slide. So right now, we're just talking about income taxes, and there are lots of other kinds of taxes that you need to think about. So this will depend a lot on where you are, what state, what city. But one of those items is sales tax. Many worker co-ops are primarily related to services. So in most states, there is no sales tax on services, but there are a few states where there are gross receipts related taxes. Generally, you have to be fairly large for those to apply. There's also property taxes. And again, most worker co-ops don't own any real estate, but you may well own some personal equipment, whether that's computers or whatever it might be. That's something that you need to be aware of in your locality. Next slide. And then you do need to stay registered in your state, wherever you incorporated and operate. There will generally be an annual form that you need to fill out and a small fee that you need to pay. It's easy to fall out of compliance with that and create problems. The big one is payroll taxes if you have employees. And generally, if you are a corporation, you will have employees, which might be yourselves. And so you need to be concerned about all of the payroll taxes. And my suggestion for anybody doing payroll is that you use a service and don't try to do that yourself. It's complicated and the penalties are as big as any place in the tax code if you have an issue with payroll taxes being incorrect or being late. Next slide. So the first thing with a worker co-op is to know what type of co-op you have. This is a fairly common question that you need to resolve right away, whether you are joining a worker co-op or whether you are forming one for the first time, is how you are going to be reporting income taxes. So the traditional cooperative is a corporation, and that subchapter T refers to a section of the Internal Revenue Service code. And it's a particular set of rules that apply just to co-ops. Many organizations start out as LLCs, and the default for most LLCs, well, for all LLCs and most LCAs, that's limited cooperative associations. The default on those is reporting taxes as a partnership. And so that's a very different way of reporting income taxes. So it's important to know which one you are. Excuse me, next page. The other two options for cooperative are an S corporation, which many small businesses are S corporations, but not very many co-ops are. S corporation doesn't fit very well with how co-ops work, but you might well be, or you might be, if you're doing a conversion, it's quite possible that the current owner has it as an S corporation, and you have to decide if you want to change that status. Excuse me. And then finally, tax exempt. There's a very narrow set of co-ops that are tax exempt, and those are primarily housing. So that would generally be student housing, low-income housing, or senior housing. There aren't really other ways that you get a tax exempt co-op, and you have to have applied for exemption with the IRS. So if you start a co-op and you think, because they do get referred to as tax exempt, whether you really fall under that formal category or not. Mostly you won't, so good to know that. If you are treated as a cooperative corporation, the tax form that you file is that 1120C. And so that is a corporate tax return, and it's due 3.5 months after your year end. So you need to keep track of that deadline. You don't need to have a December year end for your co-op, but almost all worker co-ops seem to be December year end. So your due date would be that April 15th, and you can extend that. But for your first, you have to file in whatever year you are incorporated or formed. So that is a question that comes up. When do we need to file our first return? If you if you incorporate, but you don't have any economic activity, you are still expected to file a tax return, even if it has zeros on it. So keep track of that. Next slide. And one advantage of a corporate form, the 1120C, is that if you don't owe any taxes, there is no penalty for late filing. That's with the IRS. States vary on their penalties. Many do not have any late penalties, but some do. And just to a question that comes up fairly often is, if somebody asks what your co-op corporation is, and there's no choice for co-op, then you are a C corporation. So a co-op is a subset of C corporations under tax law. So the co-op has a choice that many other businesses don't have, and that is that you can pay tax at the co-op level, or you can allocate patronage dividends so that the members will pay tax on any profits. That's really the key point in the tax code that separates a co-op from other kinds of businesses, that you have that choice. If you keep the profits at the co-op, the tax rate currently is a federal rate of 21%. In the states, that rate will vary from nothing, which there are states which either don't have corporate income taxes or which exempt co-ops from income tax. And the rate goes up to about 10% as the highest rates in some states. So one reason that co-ops will pay that tax is because the profits that are left add to the reserves of the co-op. There are quite a few discussions around permanent reserves for co-ops, and that's one of the reasons that that people choose to have a co-op corporation, is that it can have reserves that belong to the co-op and don't belong directly to the members. If you do choose to use a patronage dividend, the member will pay taxes on that amount. So the patronage dividend is deducted by the co-op, and you can actually decide and pay that patronage dividend up to 8.5 months after your year end, so September 15th. So you could pay a patronage dividend on your 2022 profits as late as September 15th, 2023, and still deduct that amount on your 2022 tax return. When you're cash basis, there's no support in the tax code for co-ops that says that you can deduct that patronage dividend paid the next year back in the prior year. So generally, I would say that you can, but it is somewhat open to interpretation, because all with the co-op. So that's different in other businesses, non-co-op businesses. Profits are almost always allocated based on ownership. So if somebody owns half of a business, they would get half of the profits, even if they never do any work at all. In a co-op, the allocation is done based on how much work you do that contributes to those profits. So the idea, the phrase in the tax code is business done with the co-op. And so you would allocate generally in a worker co-op based on how many hours people work and use that in your formula to allocate the profits. Next slide. So you can use allocations that are somewhat different than ours, but generally the way the tax rules and some tax rulings are written, ours is the one that has support and is defensible as far as what you do for your co-op. But you can modify that, but it's important to check on what the limits are to how far you can go with changing that. It's important not to violate the idea of a co-op, which is that you are allocating profits based on how much work people do, and you're not changing that too much. There are other ways to measure. For instance, in a food co-op, it's done based on purchases with the co-op, assuming that the co-op is owned by the shoppers. If a food co-op is owned by the workers, you would allocate your patronage dividend based on how much they work. Next slide. There's an example here. I won't spend a lot of time going through the numbers. I think
Pardon me. Pardon,
Yes.
we're not hearing interpretation, the Spanish interpretation. No se escucha la interpretación de español. Ah, sí. Ahora sí.
Todo lo anterior se dijo solamente en inglés, no hubo interpretación, por favor.
Could you go back maybe like 2 minutes in the last slide and repeat?
Perdón, ¿se puede clarificar cuáles son las informaciones que perdió para que podamos pedir a Bruce para repetirlo en inglés y tener la traducción? Bruce, we're just checking which parts were missed in interpretation to see if you might be able to reread the slide.
Patronage dividends, the same thing as 1040 dividends or normal dividends? Are they taxed the same way or reported the same way?
They are not. A corporate dividend that you might get from owning shares of Microsoft is taxed differently than a patronage dividend you would get from your worker co-op. And we will cover that a little bit later in the presentation, but it's definitely a completely different thing in the tax code.
Okay. Thank you.
Sure.
Can someone weigh in? Are we okay to move forward, or should we repeat the last slide? I suggest we keep going then. Thanks, Bruce.
Okay, so sorry about that. So this is an example of patronage dividends. So if a co-op had a profit of $20,000, this is your federal taxable income. And so this is after you've taken all of your deductions and so on. that's where we start the patronage dividend process. So next slide. So after we know our profit for the year, and the co-op decides that it wants to allocate a patronage dividend, then you would look at how much people worked. So in a small co-op here, there's an example of how much different people worked. And so you'd take into account your members and your non-members, and then the total hours. And you would allocate that profit based on the relative amount of hours. So for member A, they worked 2,000 hours. So that's the fourth or fifth line down. And then you divide that by the 4,000 hours that everybody worked and multiply that times your profit. So you go through that for each member in a spreadsheet. And that tells you the maximum amount that you can do as a patronage dividend. So then you would take that, and the next slide, and you would decide if you wanted to do the maximum or to do some smaller number. In this case, they decide to do the maximum. And so member A gets allocated that $10,000 and so on. And you do have to allocate the profit amount to non-members, even if you don't end up awarding any of that to them. Next slide. And an important part of patronage dividends is that you do not have to give it all to people as cash or a check. You can retain a portion of it so that it's essentially an additional investment in the co-op. So member A gets allocated $10,000, but you send them $2,000 to their bank account, and the other $8,000 stays in the co-op until a future time. And so now it is additional investment by member A in the co-op. And so now the investment is related to how much people are working or using the co-op. Next slide. Let's see. So you have the patronage dividends that are allocated in cash and the patronage dividends that are allocated in equity. And so the original profit was $20,000, and you have 3,000 plus 12,000 allocated. So the remaining profit that the co-op pays tax on is $5,000. So that would be an example of how a co-op would go through calculating patronage dividends to the members. And so the taxable income portion stays in the co-op and is not allocated to any of the members. Next slide. You do need to send a notice to the members of the amount of their patronage dividend, especially when it's not all as cash, so that they have that. That is an IRS requirement. And so there is some sample wording on the next slide as to what you might say in your notice. Next slide.
Bruce, before we proceed, there's a question in the chat. For clarity, the member that receives patronage pays taxes on retained earnings as well as cash earnings?
Yes. So if you backed up maybe 1 or 2 slides, one more. Yeah, so member A will pay income tax on $10,000. They only get $2,000 in money right now, but the whole amount they will pay income tax on. At the same time, the co-op is deducting that full $10,000. So the co-op does not pay the tax, but the individual does. And there on this slide. So the total amount will be reported on the form 1099 PATR. So that includes the cash and the retained. And again, that notice wording is called a qualified written notice of allocation. So next slide. And this is a little bit hard to read. I apologize, but it is something that you could copy and paste as a notice to your members. It mentions the bylaws section for the co-op, and then the amount allocated to the individual as money and as retained. And again, this is a requirement from the IRS that people are made aware explicitly what their amount of taxable income will be. So now we're going to switch over to co-op partnerships and the taxation there, which is fairly different than what I've just been going through. So I know that many co-ops are taxed as partnerships. And so Andrea will handle this section, and then there's an additional section on S corporations. So Andrea, if you want to take the handoff.
Yeah, for sure. Thank you, Bruce. Before I start and talk about the partnerships, I just wanted to give a pause for any questions, interpretation to catch up. Any thoughts, questions so far about the cooperative information that was presented? I'll take that as a no at the moment. But yeah, so my name is Andrea. I'm going to talk to you all now about cooperative organizations that are not taxed under subchapter T, which means this is a different section of the tax code, and there are different rules that must be followed for cooperative organizations that are going to be different than what Bruce talked about under subchapter T and what some of those benefits are. And in this section, we're going to start with partnerships. Anytime a group of people get together and form a business, oftentimes the number one type of entity, that's an LLC. LLCs are by default taxed as partnerships per the IRS. So you can be an LLC for the state. You can actually form as a partnership in your state. But when you go to file your taxes, that means that you are going to be filing a form 1065, which is separate from the corporate returns, the 1120 series. So this is an entirely different tax form. So Form 1065 is due March 15th. Just like all tax forms, they can be extended for 6 months, which means that the due date would then be in September. As Bruce said, even if it's your first year in business, even if you don't have a profit, even if you had zero activity, it is a good idea to file that first year return, regardless of what the activity amount is, because the penalties for filing a partnership return late can be very stiff. As you all see, the amount on the screen is $210 per member per month that it's late. So it's really important to either get your extensions in or file those before the due date, including any extension. Yeah, we can go to the next slide. It says our partnerships are taxed just like other partnerships, or it says cooperative partnerships are taxed just like regular partnerships. So you can operate as a cooperative. You can use patronage as a way to allocate profit in a number of different ways. We can discuss some of those different ways, but still track your hours. You can use patronage for other metrics as well. I know when I consult with people, especially service-based businesses, I recommend considering other types of patronage metrics outside of just hours worked. So whatever metrics that you're using, you can still allocate income to members, but they have to be treated the way that partnerships treated in allocation and distributed the way that partnership law allows. A partnership, if it's not clear for those who may not have the experience about them, partnerships are flow-through entities, which means you're filing a separate return, the 1065, but every item of income and expense, every item that's reported on that return gets pushed out to the members. There's no retained earnings that sits with the partnership by itself. Every item of income must be allocated. And so in any year you have activity, however many members you have, another thing to think about if we're operating as a cooperative, I'm adding this in, I don't think this is in the slide, but I'm adding this in, is when you operate as a cooperative, taxed as a partnership, anytime a member enters or leaves, that affects the way that income would be allocated to them. And so if you are operating as, if you're taxed as a partnership, one thing that I would consider when you develop like new member regulations or candidacy requirements, I might consider putting in your bylaws that there is, you know, twice a year, you all will allow members to join, or once a year, you know, people can be a candidate and then all of the candidates are entered on the same day. Because at any time someone enters or leaves, that affects the way that the income has to be distributed for that year. And then also just what we said, the entire activity has to flow to a member. There's no retained earnings. And if you think back to Bruce's example, where you had a number of people work who were not members, a portion of the profit stayed with the organized or stayed with the cooperative and was not distributed as patronage. That is not the case with the partnership, because every member who is an owner, every member owner in a partnership gets a K1. For somebody who is not yet an owner, or somebody who may work with you, but who's not an owner, they wouldn't get profit shares on their K1. And so that's one of the differences if you're considering changing your entity type. Allocation on the K1, which is part of the 1065, like we said, all items must be allocated of income and expenses. One of the main differences here between the cooperative structure and the partnership structure is, as a cooperative, we talk about patronage distribution, and that's the distribution of profit through the patronage dividend. Owners, worker owners, can be employees of the corporation. Partnership law, again, very different from subchapter T law, is partnerships, even at worker owners, if you're taxed as a partnership, you are not supposed to be on payroll. Your W-2 earnings, your portion of pay gets reported to you on a K1 in 2 different places. What would be reported to you is your salary. If you were a W-2 employee of a corporation or a co-op, instead of it being on a W-2, that's what we call guaranteed payments that show up on, I believe, box 4 of your K1. And that is separate from your profit share, which generally is going to show up on box 1. And so if you're operating as a partnership, you're tracking your hours, you're getting paid for your hours, you would report that separately than how you would distribute and report the profit, but it's all on the same form, which is generated after you file the 1065. And so we can move to the next slide.
There is a question in the chat that says,
Okay.
why do they keep talking about earnings when they're only remunerations for expenses of the co-op? And if that was a poor translation, someone else please jump in with a better one.
Bruce, I'm not sure if I understand. Maybe we're talking about worker co-ops and distribution of profit. Maybe the translation was about consumer co-ops or producer co-ops, where there's a different model of cooperatives outside of profit share where you can actually share expenses. Is that part of maybe the translation or the interpretation?
Leonor, parece que necesitamos un poco más
Hola,
información.
buenas tardes. No sé si pudiera hacer la pregunta directa.
Sí.
I'd like to make the question directly.
Nosotros trabajamos en una- pero si están hablando de
If you're speaking of
ganancias,
payments on earnings in the different forms,
realmente
really
ganancias son
they aren't they aren't profits. They're remunerations that stay as costs. They're not invested in. There isn't an investment that quantity doesn't grow. How would we declare that in our taxes? I'm not sure if my question is clear.
For Andrea or Bruce, Leonor's asking, we keep talking about the different forms of payout for profits of the co-op, but how would you declare in your taxes when they're being reimbursed for expenses that they've paid?
Okay, so that is a very specific action that happens separate from profit or loss. So if you're a member in and I think if I'm understanding the question correctly, if you're a member of a cooperative and you pay for something on behalf of the cooperative, the question is asking how to record or treat the reimbursement to the member from the cooperative. Is that the question? So it's not a profit share or loss, it's just the reimbursement to the member?
No. Es que siempre se establece en que
We always establish that they are earnings, the percentage that stays with the cooperative. For example, we give it 30%, which at the end of the year, it's meant to be an earning. It's not an earning because that 15%, we use it to pay for all the costs. If we have a portion, it's really what name could we give to that without it being a profit? We could distribute it between the members, but they're not profits. They're what's left over from, we had expenses and we had a percentage left over. I don't know if I'm explaining it, because always in cooperatives, we talk about Profits, when we talk about profits, is that when something is invested. Here, we're not investing. Here, we're reporting the cooperative, and that cooperative has costs all year.
Is by chance the question about if there's a loss in the business instead of?
Just to check, Andrea and Bruce, are you plugged into the interpretation line?
No, ¿cómo podríamos definir palabras en lugar de ganancias?
Instead of profit, is there another word? Not profits. I think what she's referring to is the costs, the expenses, like rent, like material cost, not what's paid to the members of the cooperative, but the costs that are generated from the cooperative, paper, rent, light bill, gasoline, all of that. That's not a profit. What do we name that? Do we name that our corporate expenses?
If the presenters are not in the interpretation channel, that you can't hear them translation there. And I'm not sure, Bruce and Andrea, if you are. So I'm just going to say that they're asking for a different name. They're not profits. Those are the, she's asking what you call corporate expenses or cooperative expenses. But I am entrusting the proper translation and interpretation to the interpreter. So would you mind joining the interpretation line? And then we can circle back to this question at the end of the session, if you're not already there.
How do I do that, Maureen? Do I click English under listen in interpretation?
Yes.
Yes?
Yes, thank you.
Am I plugged in now? Is there a way to check before we go forward?
Can you hear me, Andrea?
I can.
Okay.
I don't know. I think someone will have to speak in Spanish again.
On the more option, there's the interpretation button, and you just select, and there's a little global icon. You can
I think
select.
I have it. I think I'm in the English channel now.
Thank you, everyone. We're
Yep.
a Irma y a Leonor vamos a volver a contestar esa pregunta al final cuando lo tenemos bien traducida. Gracias. Andrea, you can keep going.
Okay.
Gracias.
And just to clarify and also make it clear, when we say all items of income and expense in regards to a partnership being allocated to members, that means both when there's a profit and when there's a loss. So for partnerships, if there's a profit or a loss, that gets put on the K1 and reported to members. For a co-op under subchapter T, that 1120 form, if there's a loss, it's not actually distributed to members, but that stays with the corporation and carries forward year after year. And if there are more questions about that, I will, we can address those in the Q&A, but I'm going to continue with the slides.
Thank you.
For sure. So the next topic to discuss is accrual or cash basis. One question I've gotten from a co-op is if they are paid in advance for services. This question is under accrual basis. Is there a way to avoid a profit because you were paid in advance or you're on accrual basis, so you recognize that profit before you actually get paid, and that profit is reported to members on their K1 as accrual basis? That means everything that shows up on the return under accrual is going to be reported to members. They pay tax on that amount, whether or not the cash has come into the business or the cash is available to distribute. One question I've received is how to, if they can defer the reporting of that profit to members because the cash hasn't come in. And unless Bruce has a different solution, the answer to that, just specific, I think one of those people is on, is that there's no way to defer reporting of profit or loss to members. Anything that comes in the business as profit or loss in the year has to be reported on the K-1. If you're on accrual basis, that means you are reporting your profits or your income, whether or not you receive it. It's about when you recognize it. And that affects the timing of taxability to members. So that's a consideration when you're choosing accrual or cash basis. In a partnership, that's highly important because that affects members differently than it does for subchapter T cooperative. But the main point here with this slide is that accrual basis, we have to report everything when we recognize it, and cash basis, we would only report our profit and loss as we receive it. Our profit and loss is based on what we actually receive and would also get sent and taxed to members based on what was received. Maureen, do we want to move to the next slide? And so how we allocate income in a partnership, this is something that you want to give consideration to when you are creating your bylaws and creating your operating document, because by default, the allocation in a partnership is based on percentage of ownership. Co-ops don't always distribute profits based on ownership. And so you may have to create a separate policy in your bylaws or some other document describing how you plan to distribute profit. If it's not based on ownership or if it's not equal, then you'll have to track that separately, or not track it separately, but you'll want to include that language in your document. And then as you're tracking your patronage and you decide to distribute it to members, you either want to report that as guaranteed payments if you're doing a bonus method, or you'll want to do what's called a special allocation of the profit, which is instead of reporting it equally based on ownership, your patronage is going to be reported in box 1, your share of profit, based on whatever method you've outlined. We can move to the next slide. And then we have an example here that's very similar to what Bruce went over with the subchapter T cooperative. We have $20,000 of income. This is after all other expenses. This is taxable income, so not counting some of the book to tax differences that you may see. We have a $20,000 profit. We're going to go to the next slide and look at how we allocate that. One of the biggest differences between allocation of profit in partnerships and cooperatives, if you compare these two examples, is that any hours worked by non-members does not affect the allocation of profit, because non-members don't receive profit allocations in a partnership. They're not owners, they don't get a K-1. And so when we look at how many hours here, if member A worked 2,000 hours, member B worked 1,000 hours, and total hours worked by members is 3,000. 1,000 hours worked by non-members or employees are not going to be counted in our profit share when we do our patronage. And so although the total was 4,000 hours, we're just going to use the 3,000 hours that were worked by members. And we're going to go to the next slide and see what that looks like. So that $20,000, now instead of allocating a portion of that to non-members, the patronage can only go to members in full. So 100% of the patronage would be allocated to members based on how many hours they worked of total hours worked by all members. And so member A, who worked 2,000 hours, the total by all members, if we recall, was 3,000. We take the 20,000 and we multiply that. Similar for member B, the total of the 13,000 in our example and the 6,000, when we add those up, should equal the full 20,000, because no portion of the profit gets distributed to non-members. One thing to note here is if you have cooperative members who are not yet owners, or if they're still in their candidacy periods, one thing that you can consider outside of profit allocation for patronage is bonuses. So for some cooperatives, you may not want to exclude sharing some of the profit with members who have not become full members or have reached full candidacy. So you can still offer them profit share by doing W-2 bonuses or one-time payroll payments to non-owner members or candidate members. But they cannot take part in profit share on the K1s. That would have to be pushed through their W-2. So I just wanted to add that in the example. So if you look at our numbers here, the total of the amounts that were allocated to the two owners equals the total profit. Non-members have been allocated 0, so they're not getting a portion of that $20,000 unless we were to give them bonuses, which would not be a part of that 20. We're assuming that the 20, maybe the bonuses were already distributed to non-members. And non-members, their income is reported on their W-2s because they do not receive a K1. And so we'll go to the next slide. And one of the other big things, the differences, we talk about subchapter T cooperatives and the qualified written notices. There's 20% that must be distributed in cash and the rest can be retained. For partnerships specifically, no amount has to be distributed in cash, but it does have to be allocated and members will be taxed on the amount regardless of how much they receive in cash. So you don't have to provide a cash portion. You don't have to send a qualified written notice. Their K1 serves as, that notice, whether or not cash is distributed. And I did want to pause because I saw some questions in the chat. Do we have a question there? It says, does profit generated by non-members have to be allocated to members in a partnership? So the question is if the profit that non-members help generate has to be allocated to members. That is a good question. On the top of my head, I'm thinking that we can answer that 2 ways. One of them is that any profit generated by non-members, depending on what the bylaws say, is by default allocated to members because only members get the K1. One thing that maybe could be considered in the bylaws is workers who are not yet full members, candidate members, that they could have a certain portion of profit set aside for their bonuses. Since they did help produce the profit, they did help add value to the business, that would be kind of like that bonus system where, they would take part in that profit share. As a partnership, you're not limited to distributing profit based on patronage. A partnership can also set up profit sharing plans. They can set up 401k plans. They can set up, employee incentive programs, just like any other business, and use that as a way to reward non-members who just maybe don't want to become members or can't become members. So that is a good question because that can force us to be creative in rewarding non-members through an alternative bonus system or a profit incentive program. And we're going to move on to the next slide. Policies. Okay. So this is talking about how once it's distributed to the members on the K1, on your K1, the portion of profit that's allocated to you, because it doesn't have to be distributed to you in cash, if that cash is retained by the company, then your value, your portion of ownership and the value of your ownership is going to be reflected on the balance sheet. And so a portion of the balance sheet, what we call retained earnings, if you're looking at just a summary of a balance sheet, we can call it retained earnings. But if you break that retained earnings down, each member's share of ownership, that retained earnings comprises each member's account. So if you add up what each member, their balance of their individual accounts, that would be added together to equal the retained earnings on the balance sheet. And so that's how the portion of ownership that each person has, each member has. One thing that co-ops could do as a method to protect the co-op as far as cash payments to partners is think about adding language to the bylaws or a different document about how long the company can hang on to that equity. Is there a policy where the co-op is going to distribute a certain amount every year or a certain percentage every year to the member? How long can the company hang on to that amount before they should start paying that patronage out to members, because members have already paid tax on it? And then the other option is leave it to the discretion of the board to make that decision if your co-op operates with a board. We'll move on to the next slide. And just to pause before we get into S Corps, were there any questions about that partnership section? Okay, so we'll move into S Corp discussion. The S Corp is similar to the 1120 form. It's under that same form series. And for the sake of time, I'm just going to go through this one a little bit more quickly, because I know we discussed that this isn't very common for co-ops. But the S Corp form is the 1120S. It's also a flow-through form. It's not reported the same way that K1s are, but all items of income and loss need to be distributed or allocated to owners. The S Corp returns are due March 15th. They can be extended for 6 months, pushing that due date out to September. The year end must be December. So any co-ops that have fiscal year ends could not use this entity type. You want to file a tax return in the first year, regardless of if you have profit or loss. There's a similar penalty for filing this return late as well. And we'll go on to the next slide. And so this S Corp structure, even though it's under the 1120 series, it's not an 1120-C. Where the 1120-C is the only type of return and the only code section that the IRS recognizes as a cooperative entity. So any cooperatives operating under S Corp status, they will not be taxed as co-ops. They'll be taxed as a regular S Corp, and they'll file and follow all the rules of a regular S Corp. As that part about it being at the individual level, that's because it's a flow through. S Corp is also a flow through entity. So all items of income and loss get pushed out to the individuals or the owners. Income must be allocated to members. Members are not limited to being just individuals, and that's true with both S Corps and partnerships. There cannot be an indivisible reserve account because all items of income and loss have to be allocated to members. So similar to partnerships, there's no separate retained earnings on the books. Allocation on Schedule K1 for the 1120. I think we've gone through that. One of the main differences, though, between the S Corp and the partnerships is members can actually be on payroll. Members can receive W-2s and still receive a K1, unlike a partnership. So a K1 for an S Corp will be labeled differently. It'll be labeled as an S Corp K1. But you can actually be on payroll and receive a K1 in an S Corp. We talked about accrual or cash. I think that applies for any business type, whether you choose accrual or cash basis, how that affects members. And we'll go to the next slide. I'm just going to go over this part pretty briefly. The S Corp structure has a lot of limits in the tax code. It's not as flexible as partnerships. It's not as flexible as subchapter T cooperatives. Distributions cannot be as flexible. They must be based on ownership. And we're going to go on to the next slide. If you all have questions about the S Corp structure, we can talk about those in the breakout room. And then I'm also going to go over this section a little bit more quickly too. So the other option for a lot of co-ops to consider as a model would be a nonprofit model. The nonprofits would file a Form 990, whichever they qualified for based on how much revenue they brought in. The due date for 990s is actually in May, which can also be extended. So that's the later of any tax filings is the 990s. You get more time to file. You have the option of asking for charity status with the IRS to be recognized as a nonprofit. The difference between, a cooperative that is a for-profit or any of the other entity types we discussed is that members, workers, owners cannot own or have rights to a nonprofit like retained earnings. So there's no distribution to owners outside of regular payroll. We'll go to the next slide. But there are, even though there's no ownership in nonprofits for member co-ops, there are a lot of benefits, and there are a good way to align a co-op's vision with their operating type and also access resources that a traditional co-op may not be able to access. We'll go ahead and go to the next slide. And this, like I said, you can apply for exempt status with the IRS in your state. A lot of states, they most times you would file as a corporation, but some states allow nonprofits to file as a different entity type. And then you would just apply for nonprofit status with the IRS. But the states control your original filing. And so dissolution, follow state rules. Oftentimes, if you're going to dissolve, you have to dissolve at the state level first and then notify the IRS. So there are some slight differences if you're a 990 entity. Bruce, I don't remember if you wanted me to discuss this part or if you wanted to discuss some of these differences.
Either way.
Tax law.
Yeah, either way. I don't think we need to spend too much time on these.
Yeah, consult your tax advisors. If you're interested in the specifics of the tax law, the meals deduction, you can read the percentages on the screen. That's one of those examples of book to tax differences where your tax income may not match your book income. PPP treatment could be another situation where what your tax person tells you your income is doesn't match what your books are. Let's go on to the next slide. I've seen a lot of questions and kind of confusion around this employee retention credit. The general thing I'll say is consult your tax advisor, but the overall summary of this is if your business experienced a decline in gross revenue, you would have to do an analysis to see whether post-COVID you experienced a decline in your business by a certain threshold. If you did experience a decline that was higher than the required threshold, you can do a second analysis of your wages and potentially receive a credit for wages that were not affiliated with the PPP loan for anybody who took a PPP. So first step would be to look at the impact of COVID on your business gross revenue. Second step would be to analyze your payroll. Like Bruce said, if you don't have a payroll software, consult somebody who can tackle that because that's not as an easy thing to figure out. And so we'll go to the next slide. This system related to the ERTC, it's on your payroll forms, the 941s, and Wegner has provided resources on their webpage to help you all figure out if this may apply to you, how to navigate it. We'll go to the next slide. And then personal income taxes. As members of a cooperative, you all are likely going to receive documents that might make your tax situation different than what it's been in prior years. You may receive a 1099 patronage form. That's a dividend. Like Bruce said, it's not treated the same way that other dividends are. You may get a K1 for a partnership or a K1 for an S Corp. And how that affects your personal taxes is highly dependent on everything else that is included in your tax return, your family status, your partner's income, children, credits that you may be entitled to. So we can't go over every scenario in this training, but consult your tax advisors. The patronage, we're pointing out here that the patronage distribution is qualified for the QBI. That may be language that sounds foreign to you all, but consult your advisors for the sake of time. Bruce, you want to talk about how the patronage dividends are not subject to self-employment taxes?
Sure, yeah, we will wrap all of this up soon. But just to emphasize a point that patronage dividends are generally not subject to self-employment tax, and that will be a question that comes up as you prepare your return. There is a link there to a very detailed analysis of that by an attorney. We won't go into it other than to say that it is out there and it's a strong argument. Next slide. And then the next slide after that. So there's a discussion here of how to report it. And then there's also an article on our Wegner CPA's website that goes into more detail. So I won't go through this, but there are at least 2 or 3 different ways to report the patronage dividends that won't subject you to self-employment tax. Next slide. And after that, another one. So anyway, it may get a little bit complicated. Next slide. But there are also resources on the U.S. Federation of Worker Co-ops page if there is a question that you get from the IRS. As mentioned in that second bullet point, responding with the sample letter will almost always have the IRS respond that you're okay and you don't owe any additional tax or penalties. But if you don't respond, their default would be to assume that that you do owe that. So you want to make sure you pay attention to IRS notices. And then partnerships, those are very standard. There are millions of partnership members out there in the United States. So reporting that should be fairly straightforward. Next slide. And again, next slide. And the S corporation, the same thing. There are many, many S corporations out there. So any tax preparer you work with or tax software should be able to report that with no problem. Next slide. And again, so yeah, now we can move on to any questions.
Thank you, both of you. Excellent.
There is a question that came in. If a cooperative uses cash accounting, can patronage dividends be distributed after year end?
I had mentioned that. Generally, cash basis is supposed to be based on cash in and cash out. You can modify it somewhat for things like equipment But generally, the rules wouldn't allow you to deduct a patronage dividend paid in the following year back in the cash basis year where the profits were generated. So when I work with a worker co-op that's using cash basis, I recommend that they estimate their patronage dividends in the second half of December and pay them out. There are some worker co-ops that are cash basis that feel like the way the rules are written, that it's at least defensible to deduct it in the next year. So what I would say is that it's not entirely clear. The safe way to go would be to assume that you cannot pay it in the next year and deduct it back when you are cash basis.
Before we continue the questions, I'm going to create one breakout room. I'll let the participants choose that room. I believe Andrea is going into that room with Paul, and that will just be for the cooperative developers who joined us if they have specific questions about supporting co-ops in tax season. In this room, would everyone who's on the call who wants to continue asking questions from the perspective of a co-op, please remain, and we'll continue to have interpretation here. And if you have questions, you're welcome to come off mute or add them in the chat.
Thank you all. Thank you, everybody.
Does anyone else have a question? In the absence of questions, Bruce, is there anything you want to add that you felt you could have said more about, or anyone else on the call want to share? There's a question coming in the chat as well.
Well, I think the one thing I would say is that reporting the 1099 patronage on your personal 1040 is one of the bigger headaches that I've heard from people. And so it does help to have some idea of where you need to end up. And the slides that we have presented should help with that. So hopefully that will give some ability for people to not be taxed too much. One of the advantages of co-ops is that profit allocation is not subject to self-employment tax. So you don't want to be paying an extra 15% if you don't need to.
There is one question in the chat, which is block of text from an operating agreement template for LLC partnership co-ops, asking for your review.
Thank you so much, Bruce. Yeah, I'm just curious because I think it's the thing about LLC partnerships can't have reserves, and I think that is like definitely true from a tax perspective, but I do think that LLC partnerships have reserves. It's just like where and how do you talk about it?
Well, certainly there are reserves in the sense that the amount that members invest in the co-op, is equity. It's just that equity has a member's name attached to it, as opposed to in a co-op corporation where it's retained earnings and there's no particular name of a person on it. There's not really any way to have something that is retained earnings in a partnership, but you certainly can have retained profits of the members.
ask one more time if anyone captured the question from Leonard earlier about what to call what are not profits that seem to be expenses. Did anyone capture that question? And if so, could you share it in the chat? Thanks. Did anyone else have a question? You're welcome to come off mute.
I'll also just.
Sí, yo tengo una pregunta.
Oh, sí,
Si uno cometió el error de no
If
pagar
someone committed an error
impuestos por
of
varios
not
años,
paying their taxes for a few years, and now we want to get up to date, who is the proper person to help us? Is it a tax preparer, or should we go to a certain company, or should a certified public accountant? Who is the right kind of individual to help someone and to avoid those penalties based on lack of knowledge?
Would you like me to translate?
Yeah. But either whether this is a co-op's tax return or an individual's tax return, any tax preparer should be able to assist in filing past returns or helping to determine what to do. The IRS.
No del miembro, sino hablo de la cooperativa.
I'm not talking about the member, specifically the cooperative.
Yeah, so if the cooperative hasn't filed, a tax preparer who knows whatever kind of co-op it is, whether it's a partnership or a co-op corporation, somebody who is familiar with that type of tax return could advise on what to do. So Andrea, who was on this call, certainly is somebody that you could contact. And there are other names that are a little further down in the slides of folks that you could contact to check in.
That is a good transition to share that when we send this recording out, there are 2 slides. This one, which lists members of the U.S. Federation of Worker Cooperatives, and this one, folks who are not yet members, and the various services they offer, and whether or not they speak Spanish. And in general, if you go to our website, we have a service provider directory where you can look for all sorts of services, including interpretation, tech support, legal services, and financial services. And I can go back to the previous slide quickly. Was it this one for Nick Knock?
Gracias.
And while I have you all on the line, the last thing I'll share is that we do have 2 upcoming events. We will be hosting another webinar on February 7th, specifically for filing taxes for an LLC cooperative. That will be at 4 p.m. Eastern. And then we're asking y'all to save the date. For May 3rd, we'll be doing a longer virtual summit with focuses on financial literacy and conflict mediation. And you will be all receiving a copy of the recording and an evaluation. And if there's any last questions, I'll open the floor before I thank Bruce and Andrea. If there's no more questions, then I'll just say if you have non-tax related questions and you're interested in any sort of technical assistance, or if you have further tax related questions but didn't want to work with the listed service providers, the Federation has a co-op clinic which put on this webinar, and we offer technical assistance and connect you to peer advisors. one of the peer advisors is present on this call, Emma. Another peer advisor will be hosting our next tax webinar, and they're worker co-op owners who troubleshoot your problems and can work with you on trainings and provide tools. So if you have any questions about that program, you can go to our website here and request a free intake to learn more. Matt has put in the chat the professionals taking co-op clients. And Bruce, thank you again for joining us and for opening the floor to questions. And if you're willing, I can share your contact information. I believe it's...
Yeah, it's on the slides.
All right. So folks are welcome, but as I understand it, you're not taking clients right now at Wegner?
Right.
Okay. Well, thank you for joining us. Thank you everyone for joining us. Bruce, thanks for shepherding in another accountant into this webinar. And if folks have questions, feel free to contact the Federation and I'll circulate them among the presenters afterwards. Thank you, everybody. And thank you to the interpretation team.